Good day, traders. How you doing today? It's Saturday today. For the past few weeks or so, I've been saying how the market chops and turns corners 80% of the time, and 20% of the time it will do a little trend. Okay, and I just wanted to show you that today as an example. This is oil that we're looking at. Oil futures, that is. If you've noticed, we're looking at different charts now. We're looking at NinjaTrader. So we're changing it up a little bit. Okay, we're going to look at 2-minute and 5-minute. I have four different. I have oil. I have the S and the P. I have the Great British Pound, and I have oil. Okay, that's what I have available right now. So we're just going to cover oil on Friday, okay? The trades. I could go and jump to any other thing, like I could go and show you on the NASDAQ or the S&P. I could show you trade setups there too. But for this video, just for an example, to show you that I keep telling you in my videos that you can go for 1-to-1 win-loss ratio, okay, successfully, and not thinking that you're going to go and get like 5-to-1 or 10-to-1 on the trades. Okay, I'm going to show you how you can go for 1-to-1 and still be very successful with it if you trade divergence, that is. Okay, I am not a financial advisor. I'm not telling you how to trade. Or how to do your money management or whatever. I'm just showing you that it is possible. You can do 1-to-1. You don't need to do 5-to-1 or 10-to-1 or 3-to-1 or 2-to-1. You just need to do 1-to-1 win-loss ratio. Okay? This is not trading advice. I'm just showing you the setups and how they will yield afterwards. Okay? So like I said, this is NinjaTrader. We're looking at oil, 2-minute time frame. Okay, so here we go. Let me show you the divergence of the first trade. Okay, it's right here. Yeah, this platform's different. It's going to take me a little bit to get used to it. Okay, right here. So there's the divergence. It's hard to see hidden divergence, okay? There's a high retracement and a higher high right here, but the blue does not coincide with that. So there's no divergence there to sell it right here. So anyway, but let me show you here. Jesus, the damn sun's shining in my eyes. Ah, yeah. Sun's coming down right in my eyes. I hate that. Jesus. It's blinding me here. Okay, so anyway, we have this little tool here. It's called the risk reward tool. See, risk reward. I click on that, and, okay, so the entry was right here to sell it. So the stop is right there, okay? Now you can see, if you pull it this way, we had a 21-point stop, tick stop, whatever you want to call it, okay? So let me explain this to you first. This yellow or this gold line is the entry point. Now, if you see the red line on the top, we're selling. If you see the red line on the bottom, that means we are buying, okay? So, oh, itchy ear. So anyway, this is our first trade. This is the divergence right here and right here. This is the entry point right here. Okay, actually, hold on, sorry. Actually, the entry point is right. It's even less. We'll just leave it there. Oh, 19 now. See, it made it less. Okay, anyway. Let's just leave it at that. I like the 21 better. There's the 21. Okay, we'll just, it's right there. Okay, it's 19 pips, okay? There's the entry point. There's the entry point. There's no need to put an arrow on here because we have the line and the stop and the take profit, okay? So there's the first trade. That's a winner, okay? Let's move on now to the second trade. There's no divergence here. So there was no buying in here to take it up, okay? And there's no selling here either because there's no divergence in here, okay? All right. But there is divergence, ladies and gentlemen, right here. Okay? And I could draw it anywhere. Let's just draw it to here, okay? And from here to here, right? We would have bought up in here. So let's say we did the buy from right here, okay? And we drag it down to our stop right there. See? It's a 22 tick stop. Actually, it's a little bit far, but that's okay. And our target is 22 ticks, right? Righto. What? Why did that come down? Anyway, oh, it probably went there itself to the very bottom. So anyway, we have a 20 tick stop loss, okay? This is and a 20 tick profit. So that makes it a 1-to-1 win-loss ratio. If you come down here, you lose 20 ticks. If you go up here, you make 20 ticks. It's the same amount that you're going for is the same amount of risk for your stop, okay? So that's 2 winning trades now. That's 39 points, okay? Yes, this one, if you tried to double it, it probably wouldn't work. Probably would have just missed the target. Now this one up here, another 20, yeah, it would have hit the target. But most of the time, not always. Okay, so let's move along here. That's 2 trades, 2 winners. Divergence first, okay? There's got to be divergence to support doing the trade, okay? Or whatever strategy you like to use, okay? I'm using a 1-to-1 win-loss ratio because I know it works 8 or 9 times out of 10. If you go for 2-to-1 or 3-to-1, it doesn't work 8 times out of 10. It might work. I don't know what it'd work. We could figure that out, I guess, but I'm not going there. Okay, so up here, what did we have up here? We had a high, a retracement, and a higher high. You see that? So we had a high, a retracement, and a higher high. That is divergent, ladies and gentlemen, okay? Right here like this. So we would have got in right here. So we take our risk reward tool and say we got short right here. Our stop is right there, okay? 20, our stop is right there. Just above the high, that's where we need to put it. Always the nearest swing high, which is right here. Okay, let's drag it over here now. Okay. So it was 23 ticks was our stop, exactly to the top. Did we hit our 23 tick take profit? We did. So there's a third winner, ladies and gentlemen. Now, let's move on, okay? What do we have up here? We have what we call a double top, okay? Right here to right there. Double top or close enough. Nobody's perfect, nothing's perfect. So we would have got in from right here. I know it's divergent. I know it's a double top. There, that's divergent. Close enough. Close enough for what I trade. Okay, so double top that's now put in the stop. Okay, so say we would have got in right here after the 5 crosses down below the 7 and the price closes down here. So right here we would have sold it. Our stop would be right up here like that. Okay, right there. Did it hit our target, ladies and gentlemen? Yes, it did. 1-to-1 win-loss ratio, 31 ticks. It would have won. Okay? Now, here's the end of the US session. Okay? Let me show you the next trade. This is the last trade. Okay? So you go from here to here, a low and a lower low, and a low on here and a higher one. Okay, we would have got in right in here. Let's get our risk reward tool. The entry would have been right here and our stop would be right there. Okay, did it hit our target? Why did that happen? Like, is that messed up? I saw 25, then it jumped to 27. What the hell's going on? Something weird. Our entry point is right there. There, that's more like it. It jumped. I guess when I drag it up, I'm just learning how to use this thing. When I drag this sucker up, it jumps from the place I placed it from. Ah, you little bastard. Okay, now, this was the trading day on Friday of oil, okay? So let's add this up now. We got 19 points with the and then we got 20. Okay, we got a sell here. It hit the target of 1-to-1 win-loss ratio. And then the second was 20. That's 39 ticks successfully taken. 39, 49, 59, 62. Total of 62 points. The next trade, 31. So what's 62 and 31? It's 93. There's 93 points right here. And our fourth last trade, 24 points. So what did I say? 94. It's like about 125 pips or ticks. Ticks, Jason, ticks. Jesus. See, right there. You could have done 1, 2, 3, 4, 5 trades and made 124 ticks. Even if you did 3 of these trades, okay, ladies and gentlemen, you know, you did good. You did good. And it proves my theory. Like, how many trades did we do here? 1, 2, 3, 4. We did 5 trades in the US session. This is 8 o'clock right here, starting. And this is 12 noon right here. Okay, did 5 trades. All winners. All hit their 1-to-1 risk loss ratio targets. So how do you like them apples? Should we look at something else and I can show it to you again on a totally different instrument? I can. There's trades after lunchtime too out here. You know, they're winners as well, but it was just a trend after that. The best time was at between 8 o'clock and 12 noon, 4 hours. That's was 4 hours here. Okay, let's look at something else now. How about we look at the NASDAQ? Okay, oh, that's the 5. Let's look at the 2 minute. Let's look at the 2 minute NASR. Okay, here we go. Let's just look at from the time to trade. This is the 2 minute chart. Okay, see that 2 minute up there? You see it? All right, let's do a few trades. So here's the big one right here. Okay. So we hit our target very quickly. And it was right here. So you would have sold right here. Stop was right there. Okay. And there it is. So you had a 155 tick stop and you made 155 ticks. Yeah, so whatever that added up on the other one, it's ticks. It's like 125 ticks. So each tick, I believe, it's like $12.50. So what's the math on the what I just showed you on the oil? So 125 times, if you're doing a mini, $12.50. That would have been $1,562.50 you would have made on all those trades. Okay, just on this trade here, 155 ticks times 1.250. It's 1250. No, that's wrong. 155 times 1250. 1,937? I don't know. That's freaking ticks. I'm sure it's a dollar. For the if it was a micro, it's $1.25. Let's try that. So 155 times 1.25 for the micro. It's $193.75. So that trade right there, that hit the first target right there. See? Yes, indeed. Okay. Let's move on. All right, so that's the first trade. It was a winner. Then there was a second trade. Let me show you that second trade. Right here to right up at the top. Okay. It is divergence, hidden divergence. Here it is right here. It's 2 minute chart we're looking at. See? Right there. Where was the trade? Here, let me just put an arrow on there for you. The trade was right there. You can see those arrows nice, huh? Yeah, baby. Okay, let's put on the risk reward doodah right here. So you would have sold it right here on the opening of this candle. And your stop, I would have put it right there. That's 160 points. I would have put it right there because that is the 15,600 level right there on the NASDAQ, MNQ, okay, or NQ, whatever you want to call it. All right, hold on. Yeah, see, you drag it along. It's so easy to move it out of its correct place. There. Now it says 163. Anyway, did it hit the target? Yes. Did it hit your stop up here? No. No. You ever noticed all these trade setups I show you? It very, very rarely goes back and hits the stop. Why is that? Because it's divergence, baby. They already took out the freaking stops. That's what's so goddamn genuine about it. Okay, let's move on. Let's move on. Okay. We have a low, retracement, lower low. That's a divergence, isn't it? It is. It really is. And it lost because because the trend is down and you're trying to trade against the trend. But I'm going to show it to you because I'm not going to just show you winners. I can't. You can't. Nobody can win all the time. It's just not in the cards, ladies and gentlemen. Okay? But myself, okay, I would have not done this trade. Okay? See, right there, buying right there. I wouldn't have done that trade. Do you know why? Because look, we're in a downtrend. Big downtrend. Okay? From way the hell up here. So you can try doing the trade, but you got to have a real tight stop on it. You know, and as you can see, it went bad on you. All within 2, 4, 6, 8, within 10 minutes, it went bad on you. It told you. Well, my system tells you if the 5 crosses back down below the 7, okay, it tells you get the hell out because it could keep going down, which it did right here. Okay, then do we have another trade here? We do. We definitely do. Oh, geez, I got the hiccups. I must have drank too much coffee. Tim Hortons coffee. Okay, so right here, okay, is the trade. And it's right here to right here. Close enough. I think it's more so like right there. Okay, so on this one, let me just make this bigger here so you can see it. There. You can see it now. So, where would have you got short? See, as soon as it gave you an opposite signal, it told you to get out of your buy right here. And it told you to sell right here. So where would I get in? Because the 15,500 level is right here. See how they're buying off of it? Oh yeah, baby. They were telling you, you know, don't sell like in here because they kept buying off of it. I would want a candle to close below all these wicks here, which is this one. So I would have got in the trade right here, okay? And my stop, that's a big stop. I would have put it at right here, okay? And look what happened. It sold right there on the close of that candle. It went down and you just hit the target. Still, it's a winner, man. Chicken dinner, it's a winner. Okay? It's a 135 tick winner. And that was your stop. Did the price go back up here to your stop? No. It kept coming down until it hit its, you know, whatever down here. Okay? Let me show you the last trade. Okay, this is the NASDAQ we're looking at right here. Okay, we got a low, a retracement, and a lower low. Okay, right there. So let's go over here now. Check this out. Now let's get our measuring tool. So you would have got in long right here. You know, you already did a long over here and it didn't work for you. Okay. But would you be willing to try and do another long now after it's run all the way down, 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 all the way down? I don't know. But if you did, I would put the stop right down here. Okay? Your entry. It's right there. That's your entry. Let me pull this down a bit. Okay. There. You see that beautiful thing, ladies and gentlemen? Ladies and gentlemen, that is another 98 tick winner. Okay? And I could keep going on and on all the way over here and show you more of them. But I think I proved my point home. I think I proved, let's squish this up a bit. Oh yeah, this is on. There we go. Okay? Let me just put the arrows on here for ya. Okay. So our first sell was right here. You can see those arrows really good. There's another sell. That was a bad trade. And this sell trade was right here. Okay. And then we had one more buy trade right here. Right there. Okay. So we had 1, 2, 3, 4 trades, 5 trades, and one was a loser. Okay. But you didn't lose that much because you would have got out right up here. Okay. And then you would have done the sell trade. You would have recovered your loss and a profit. And then if you wanted to keep trading outside of the U.S. session, this is the U.S. session here. Okay. So how much did we make here? We had 155 and 163. Let me get my calculator. My brain ain't that good in the math. Okay, so 155 plus 163 plus 135 over here. 135 plus 135 equals 453 ticks. Okay, now we got to minus some ticks for this bad trade right here. So what will we let's take away 20. So minus 20 ticks, let's say. 433 ticks plus this trade right over here, 98 ticks plus 98 equals 531 ticks. That's how much you would have made on the NASDAQ if you did all these setups, okay? Which was 1, 2, 3, 4, 5 trades from basically 9, yeah, basically about 20 after 9 to 12, 9 to 1. That's what you got. See, those are all 1-to-1 win-loss trade setups. I never tried to go for double the amount. You know, I just trying to get 1-to-1. And you know, but most people they'll look at this. Say they got short right here. Okay, they'll look at this and they'll say they grabbed 155 ticks on this trade right here. You know what they'll do? They'll cry. Wah, wah, wah. They'll fucking cry that they didn't stay in the trade and go down here because they keep saying, oh, if I only woulda or shoulda or coulda, but didn't stay in the fucking trade until it went way down here. I could have made more money. Yeah, I could have made more money. Don't give a fuck about this money that you did not make here. It's a dream. Most of the time, it's not going to do this where you can get 2-to-1. Hey, if you want to try, go for it. But I'll tell you, most of the time, it's not going to work for you. Look at this one right over here. Look at this trade. You see how we got out by the skin of our teeth? Right there, we got our 1-to-1. Would have we got 2-to-1? No. And look what it did. It went back up and it gave another signal over here. Okay? So you got to see what I'm saying. So many traders, they see after the big move, they sit there and they cry and they say, oh, if I only woulda, I coulda, and I shoulda, but I didn't stay with the trade. Aw, sorry. I used to, believe me, okay, you gotta believe me. I am not trying to be ignorant to you. I am not cutting you up or trying to make you feel like low as the ground, okay? I'm just telling you to try and get it through your head, to stop dreaming and thinking you can get 2 and 3-to-1 win-loss ratio when most of the time you can't, okay? And I used to do the same thing. That's what I'm trying to say. I used to be a woulda, coulda, shoulda, but didn't person also. And my broker used to say it to me, and he was laughing his ass at me. His name was Tim Tim Hannigan from Aileron Trading in Chicago, Illinois, and he passed away a few years ago, but he was one of my mentors. And you know what? I traded with him for years. He was my broker. We used to trade soybeans. But anyway, he was right. I didn't even realize that I was doing it. And I would go, oh, if we would have stayed in. I used to tell him, eh? And he goes, woulda, coulda, shoulda. You know? And then he used to tell me on a Friday, okay, Jason, take profits, take profits. He said, that's it for the week. And then I go, oh, no, I want to leave it on. We'll make more money next week. We'll have a gap open and I'll make more money, right? And he goes, if you don't take it, the market will. He said that to me so many times. Then you know what happened? Whatever money I made this week, I fucking lost it the next week because I didn't listen to my broker. Instead, I did whatever I did. Okay, I lost all the profit and some money on top of it because I wanted to woulda, coulda, shoulda. When I should have listened to my broker, you know? Let me just tell you about this one trade and I'll end this video. I had something like $100 left in my account after, you know, like I put like, I don't know, 2,000 in or something like that. And I was trading it and all that I had left was $100. So he's there, we can do a trade. We can do one last trade, he says. He's there, I'm not even going to charge commission. He used to charge $60 commission. I said, yeah, whatever. He's there, no. He's there, we got one more chance. And it was like I think it was in June. And he bought me a call, September soybean call at a certain price, whatever. And it was way out of the money, way out. And he's there, no, he's there, we got a chance. So anyway, a week and a half went by and it kept losing its value, you know, what do they call it? Intrinsic value or whatever. And anyway, it kept losing value and losing value. I think it was worth like $10 after 2 weeks of being in it in this September soybean call. And anyway, I said, I'm going to lose that money too. He goes, no. He's there. The key yield development time's coming. He's there. Stick with it. Don't sell it. Don't get rid of it. Hold on to it. Well, you'll never guess what happened a week later. We hit a hot and dry spell right in the key yield development time. And that call option that I paid $100 for and went down to $10 in value shot up, man, like to $1,100. Like we're talking 1,000% it made. and I got out of it. And then he got me into another trade and beans kept going up and we turned that $100 into $5,000. Yes, indeed. I'll never forget that trade as long as I live. But anyway, the point I'm trying to make here with this video is you can do well with 1-to-1, but if you want to dream and think you can get 2-to-1, 3 or 4 or 5-to-1, well, I wish you the best. I wish you the best of luck on that. But anyway, I love this Ninja Trader. I love this little tool here that shows you the ticks that, you know, that you can, you know, and it's very easy. Like once you put on your trade, you know, if your trade was right here and you sold, you just, you know, put on your buy order up here for the trade if it hits the stop, and you put on your sell down here. That gets you out with the profit. But if you want to be greedy and keep moving your stop down or moving the take profit down some more, thinking you're gonna get rich off one trade, I wish you the best of luck. Or moving your stop to break or even too early, and then you move it down, and say you move it to break even right here, right? See, and it went down, and you move, and you go, oh look, I'm gonna put it to break even now. So, well, let me widen that up to show you. Let me make that bigger to show you what the hell I'm talking about. Okay? You see, you sold right here, okay? And you had your stop up here. Where you should have just left your stop there, but instead you go, oh, I got to move my stop to break even now, or with a small loss. And guess what? Price goes down, misses your target by a few ticks, comes back up, stops you out right there, and you get nothing on that trade. And then what happens after you get stopped out? It goes down and hits your target right there. So this is why you can't do this. Oh, woulda, oh, coulda, oh, shoulda, but I didn't. Don't trade like that, okay? Unless you have two orders, okay? The schematic of that is two orders. So if you sold two right here and your stop's up here, as soon as you need to cash out on the first one, then you move your stop to break even. Okay? So, but if you're trading just one single contract, well, you can manage it however you want, but that's how I would do it. And I just showed you and proved to you that, yes, you can get 2 to 1 sometimes. This one would have worked. Okay? And this one would have worked right here. Okay, you would have got 2 to 1. It would have worked. But sometimes it doesn't work, like this one right here. Anyway, that's why I go for 1 to 1 win-loss ratio. Anyway, I want to thank you for watching, and I want to thank you for listening. It is Saturday evening. I need to go make a big pot of soup now. I need some soup with low sodium because salt is a killer. Okay, stay away from salt, people. It's not good for you, especially salt vinegar chips. God. Okay, so anyway, not Monday because it's the Labor Day weekend, but on Tuesday I will be coming back. Okay, and I will be using NinjaTrader. I'm no longer gonna talk about Forex pairs. I'm only going to cover futures, okay, and that's it. And I'm going to cover the MNQ, the NQ, the NS or ES, and the pound, which is the 6B, and oil, okay, CL. And that's it. That's all I'm going to cover from now on. But I'm going to look at 2 different time frames for each instrument, okay? So it will take some time. It'll probably take more time now. So my videos will probably be longer now because I'm going to cover the setups, or try to cover the setups, only in the US session though, okay? From 8 o'clock right here to 12 o'clock right here, okay? I'm not going to cover all day 2 time frames. Okay. Thanks for watching. Thanks for listening. Good luck and good trading. Have a great Saturday night.